Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory here in Birmingham, and I thought I would come to you today with a quick recap of 2019 market performance, as well as a brief update on how the market's behaving here in the early part of 2020. No question about it, 2019 was a great year. The S&P 500 returned about 33% over the course of the year, which puts it in one of the top 10 return years of all time. Going back to the 1920s, that's a really, really impressive performance. It should be noted it is in the context of the sell-off that happened at the end of 2018. So for those of you who are able to mentally rewind the tape, you'll recall that from about October to December of 2018, the S&P 500 sold off close to 20%. And then the market really started to rally to get that back in January and really sort of rallied all the way through 2019. If we were to do peak of the market in 2018 to its year end 2019, you would have seen about a 10.5% overall return for the S&P 500, which is somewhat in line with what we normally expect equity risk classes to return. So a fantastic year, however, coming off a little bit of a weak end to 2018, which really helped to boost those returns. I think what's more interesting about the 2019 return year is that fixed income asset classes also did phenomenally well. So the Barclays Ag, which is an index of most of the fixed income assets, investment grade fixed income assets, returned about 8.8% over the course of 2019. And for anybody who's holding a blended account, if you have your fixed income assets that return close to 9%, as well as your equities performing at 33%, you should have had a very, very nice return over the course of 2019. Here in early 2020, the market, just a few trading days have gone by. The market seems focused on what's going on in Iran. And not without good reason. Obviously, I think that there's a lot of uncertainty coming out of that region currently. However, I would remind people that geopolitical events rarely impact overall market returns unless those geopolitical events directly impact some type of factor that drives either earnings growth or GDP. So in the case of the Middle East, you'd obviously look at oil, and it's certainly true that oil prices have rallied. We've seen a little bit of what they call a geopolitical risk premium priced into oil for the first time in a while. But away from that, most other equity asset classes are just in a sort of a wait and see mode to see whether or not any of the tensions that are available in the region would actually spill over into economic activity. And to date, that hasn't really been the case. In any event, if you have any questions about this or anything else, please feel free to reach out to myself directly or to your advisor. I hope everyone had a wonderful new year, and I wish everybody a great 2020.